So if you know what the bond is, you can then say, okay, if I'm going to give you something that you can walk away with and feel that you have actually gotten something out of the deal, but I want to give you less than the market value in order for me to gain something, I need to then know the difference between the selling price and or the market value and what the bond is. And that's the play in which I have in order to negotiate with the seller. So that's why it's important to know the bond, and these reports can give you that. All right, suburb trends. That's the other thing that these two platforms can give you. This information helps you understand the area market. Is the area appreciating in value? Is it going up? Or is it depreciating in value? Is it going down? What are the average selling and rental prices, the escalations, the default rates, the tenant profiles, the demographics of the area? What kind of income do the people within that region get on average? What is the age groups within? There's so much information that you can get from these two reports. So much information that will help you in making your investment decision. You'll be able to see what the values of the properties are in the area, whether it's increasing or decreasing, what the rentals are, all of that stuff you can get from these reports to inform you on what you should pay for that property, how much rent you should charge, what type of person that you are going to attract, and what type of escalations you can charge as well. So those are the kinds of things that these reports can give you. Okay, let me just take a sip of water before I jump into the next part. Okay. I just wanted to show you my Enterprise Development Cup, Property Cup. Okay, Property 24 and private property. What do you get from them? Area-specific searches. It's not just these two. There are many others that you can go to, but these are the ones that I use the most. I also use Property Pick and a whole host of others that I use. But these two are probably the most comprehensive in terms of being able to find property in the area that you want to buy in. So both these websites allow you to search for properties in specific areas anywhere in the country. So you can, with these, say, I want to buy between 1 and 3 million rand. I want 2 and 3 and 4 bedroom units. I want so many bathrooms. I want so many garages. I want etc. 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 You put in all of the search criteria. You click a button and it tells you all the properties that's for sale in those areas for those prices in those specific demographics and so on that you've inserted into the profile. It also gives you purchase price analysis. They allow you to search within your price range. Sorry, I've just lost my screen. There we go. They allow you to search within your price range or look at a broader price range to see what the average selling price is in your area. So if you know you want to spend $1 million, then what you do is you put the price range from 0 to 2 million maybe. And then you can see within that whole price range what the selling prices are in that area. So it doesn't just give you what you're looking for, but a much broader. You can put in from 0 to 100 million, and it will tell you all of the properties that are for sale within that range. So if you know you want to spend $1 million and you put in the price range of 0 to 2 million, then you know whether you actually qualify from that $1 million rand to buy property in that area, or how hard you have to then negotiate to try and purchase a property with that 1 million rand that you have in an area where properties are traditionally going for 1.5 million. So then you genuinely have to go and look for a serious distressed property that you can negotiate down to 1 million rand, even though the property is maybe worth 1.5 million. Either then find a distressed seller or a distressed property for that $1 million rand. Okay, so that's what that report will give you. It will tell you the range of rental that you can achieve with the property within that area that you are hoping to invest in. You can find real estate agents that operate in the area that you want to buy in. And then you can create and build relationships with those people in order to then find good deals. In order to find good deals, you have to have a relationship with the real estate agents in that area. And if you don't know the people in that area, this is a good place to find out who the real estate agents are. Okay. Let's see, is there anything else that I want to talk about today? No, this is actually protecting your wealth is for next week. We've made up some really, really good time. It's only 11:05. So we have some time for us to ask some questions, and we'll get into protecting your wealth next week. The only reason is because I haven't prepared for that part yet. All right, I'm going to stop sharing now. And Ndumiso, let's go.
Yes, thank you, Nigel. This was quite a very useful session. I hope no one switched off while you were talking about the financial metrics, especially when you got to the net present value and all those things. We here at Tekasi Properties, we are trying to build what we call educated investors. What I mean by that is that we don't want you to be dependent on the so-called experts. In this case, we don't want you to be dependent on accountants like myself and Nigel. We want you to be able to be able to do these calculations yourself, because this is what you are going to need to make the decision. You can't see a property and then you say, no, I need to first check with my accountant, and then your accountant is going to give you a quote and all of those things. We want you to be able to do the calculations yourself. So if you did not understand what Nigel was talking about, give me a call. Let's arrange time and talk about how to do those calculations. But for now, ask the questions. Nigel is here. Ask the questions and anything else that you would want to know. Also, what I wanted to say is that when Nigel started with these sessions, he did say that property investing is hard work. So if you hear people saying to you that this is where you relax and you don't do anything, it's not the case, because you can see the kind of due diligence that you need to do before you make the decision. And then you have more challenges. Once you invested, there is more challenges that will be coming for you. But property investing is hard work and it takes dedication and diligence. Ladies and gentlemen, Nigel is here. Let's ask the hard questions or the questions. You can raise your hand. You ask Babantuli.
Sorry, I see there's a question about the program, the 300 Rand a month tablet. Won't you share that video again with everybody in terms of where they can, how they can register for that program? It's actually quite simple. You go to our website. There's the edpfpropertyacademy.com, and on that there's a apply online button, and you can apply online there. But there is a video that Ndumiso will share with you.
Yes, Simpiwe, I will give you the video, and I will also just post it on the group again so that everyone has got access to what we're talking about. Was that the only question? Was that the only question you had, Baba?
No, just one more. It's not a complicated one. I just wanted to ask in terms of keeping, when you get your monthly rentals, in terms of keeping financial records, I just wanted to ask, what is everyone using? Because I'm currently using a Excel spreadsheet, and it's quite a lot of work, and it's not really showing me the metrics that I need to know. So I'm just wondering if there's a particular software that anyone is using in the group. Thanks.
Yeah, that's an important question, Nigel. When Simpiwe, let's see what Nigel has got, what suggestions he's got, especially for people that don't have lots of properties.
Okay, I do not want to advertise anybody's software, but I mean there literally hundreds of different types of software you can use. The very most basic is software like Xero, Xero, not Zero, Xero. There's Sage Pastel, which you can do online. There are when you get into some serious investing and you've got hundreds of millions of rands worth of property, then you need to become a lot more specialized in property management software. So there's a bunch of property management software out there. And again, I don't want to advertise anybody's software. So go Google property management software and then just see which of those management softwares are better for you from a pricing perspective, as well as its functionality. So like I said, there's literally hundreds of softwares that are out there. Excel is okay if you only have 1 or 2, maybe even up to 5 properties. Because with Excel, you can actually, if you know how to use Excel properly, you can actually do some serious calculations within Excel. I often use Excel for most of my calculations, but from an accounting perspective, in order to make it easier for you to manage your books, I would recommend you go and get one of those softwares like Pastel or Xero and all the others. There's so many cash books. There's a whole host of them. Once you get into serious investing into property, then go and look at a specialized property management software, because all property management softwares also have an accounting side to it. So once you get into a property management software, because you've got enough property, I would say once you hit 10 million rand and above in terms of property investments, then I would say start investing in property management software.
Okay, thanks a lot for that.
Yeah, thanks. Hosanna?
So my question is just a simple question on the rental escalation. In an area where the demand is low, what is an ideal percentage that you can escalate for rent? In an area where the demand is not that much.
Yeah, I think
Okay,
Hosanna, we got your question.
All right. Okay. There's a bit of a scratching noise, Hosanna, behind your mic. I don't know what it is.
I actually think it comes from you. It's gone now, Nigel. I think it was your speaker, but it's gone now that you touched it. That's why I suspect it's from you.
Oh, okay. So yes. So your escalation depends on the market you're in. I cannot tell you what an ideal percentage is. Your ideal percentage is whatever the market is. So you need to look at the market and use those tools like TPN, Lightstone, Property 24, Private Property. Use those tools and investigate what the escalations are. Talk to your real estate broker in the area, your brokers, not just one, and find out from them what the average escalations are in that area. Typically within a low escalation market, it's anywhere between 3% and 7%. In a medium escalation market, it's normally between 6 and 9%. And in a high escalation market, it's anywhere between 8 and you can go up to 15% sometimes. So that all depends on the market and the area that you're in. I can't, like I said, I can't give you a typical number, but those are sort of the averages: 3 to 7, 6 to 9, and 8 to 15.
Okay, thanks, Nigel. Bongani?
Okay, I hope you can hear me. Okay, the report that Nigel mentioned, and the report that would make one really negotiate from a position of knowledge. And how does one get those reports? I'll tell you why I'm asking that question. Because there are few deals that I'm considering, and then I've delayed them so that I can attend this session. But then how do I get those reports when I make the the real estate agent, I can then negotiate from a position of knowledge. Thank you.
Okay, I'm not sure which reports you're talking about. You're talking about the Lightstone, TPN, and those kinds of reports? Or you're talking about the IRR calculations and those kinds of things?
No, I'm talking about the report that will be able to show, for example, the last, what was the last bond that was registered,
Okay.
and how the properties, the market value of the properties in the neighborhood and related matter.
Okay, so those reports are TPN and Lightstone. So Google TPN or Lightstone and then register with them. If you are on my, like I said, if you're on my incubator program, you get those things for free anyway. If you are on the tablet only, you're going to have to pay a minimal fee. You can get access to it for free, but you have to pay for the reports at a discounted rate. So, but those are reports based on software. So Lightstone is a software package. TPN is a software package. So when you Google them, then you go to their website, register. Just give me a second. My son just walked in. Okay, there we go. Sorry about that. That's the thing about these Zoom meetings. Yeah, people disturb you. Yeah, he came to fetch his lunch. Okay,
Yeah,
so these reports you get from those companies. So Lightstone is a company, they've got their own software, you can get it on the internet. TPN is a company, they've got their own software, it's on the internet. So that's where you get it. Google them, register on their platform. If you're not part of my program, you're going to obviously have to pay. So then go and pay the fees. I think, if I'm not mistaken, and I speak under correction, so don't take this as gospel. I think it's 126 Rand a month for Lightstone, and TPN is about the same, I think. And then you get certain amount of reports, and then anything above that you have to pay for every time you draw a report. So there is a fee to be paid, but like I said, if you're part of my program, you don't pay that.
Thank you.
Okay. Okay, seems like Bongani is happy. And Zuzo wants to know, number one, he says, thank you, gentlemen, for the Finance Class 101. It seems like if you own your property outright using cash, you can get taxed higher than if you are using the bank's money, as there seems to be a lot more leniency and deductions. Is this mostly the case? So he wants to know, is it which one is a better way of investing, using cash for tax purposes, using cash or using the bank's money? So
from a tax perspective, it actually makes no difference whether you're investing using the bank's money or using your own cash. It is in the calculation of your net income, where you're investing, what you're investing in, whether you are doing renovations, whether it's a brand new development. Those are the things that determine how much tax you pay. How you structure your business, it determines how much tax you pay. If you structure it in a 13-6 or a 12J or a 13 SEC, there are a whole host of other incentives that you can use. Whether you're buying cash or bond does not determine how much tax you pay at all. What it does do, however, is that when you are when you put your cash in, there's no bond to pay, which means there's no capital outflow, which means that all your expenses can be deducted. Whereas when you are using a bond, there's a capital outflow. So your cash and your net income is different, and you'll pay a higher tax than what your cash flow is, because you are not able to deduct the capital repayment. So those are the kinds of calculations you need to be careful of. But the direct answer to your question is no. Whether you are investing with cash or whether you're using other people's money or a bond or whatever, that does not dictate how much tax you pay. It is in the structure of your business and what you buy and what you sell and what type of expenses you pay, etc. That's what determines how much tax you pay. Now, not specifically related to tax, but from an investment perspective, I would never recommend anybody to use all their own cash to buy a property. Always leverage your own cash with other people's money, whether that be the bank, partners, whether it be angel investors, whether it be equity investors, whether it be the receiver of revenues money, using 12J and 13 Secs and so on. Always use your own money only as leverage to get other people to invest. That way, you can invest in more property. Because if you've got R1 million and you put all that money into one property and don't take a bond, okay, yes, you're going to get all that money as yours, but you can't grow your capital base, which is really what property is about. Property isn't so much the initial cash flows that you're going to get. Property is about long term. How much capital growth can you get in your property? And that's really what property investing is all about. Yes, you can potentially get immediate cash flow, and over the period you can get some income and cash flow and so on. But that's not ultimately what property investing is about. Property investing is about that legacy, about building that capital base that will in 10, 15, 20 years time pay for it. It is a lot of hard work in order to build a property portfolio. But once you get it right and you employ the right people, that will become passive income in the future. You need to work hard now in order for the future, you can then relax and get passive income from that. And the way you do that is build a capital base. And you cannot build a big capital base only using your own money. Any investor in property, the big boys, all the big boys, Rebosis, Ascension, those two companies I used to work for, the big companies like Growthpoint, Redefine, Arrowhead, all these big companies, if you look at all of them, not one of them is owned by a single individual. That person may have been the founder and they may have a big stake in the business, but actually the money came from other people, came from banks, came from equity houses, came from investment partners, etc., etc. And that's how they got to build billion-rand businesses, because they used other people's money. If you're only going to use your own money, you'll never get there. You will slowly and slowly and slowly build your portfolio in a very, very slow way. Using other people's money, you can expand very quickly.
I was wondering, Zuzo, why you wanted me to ask you the question for you when you can speak for yourself.
Sorry, man, I just couldn't, there was something wrong with me trying to get logged on. I don't know what was the problem.
Okay.
And use my hand. Now, speaking more specifically to the multi-let type of developments. I don't know if I'm heard. Can you hear me?
Yes, now, but can you start again?
Oh, so I'm clear now. I can be heard.
Yes.
Oh, I think that was the challenge. I'm saying I was speaking more specifically to the multi-let type of units, where I was seeing, like, I think I still have to sit and go through these terms, the net present value, and go deeper into them, because there's quite a lot there. I mean, I need a whole month to study this thing. But I was looking at the deductions, as Nigel was saying. There are some deductions that you get away with, you know, there's a way. But if you own your property like outright, you would have built it using cash, or you bought it using cash. It was seeming like you don't have those escapes, those leniencies, and you know, that leeway that I was referring to. So
okay.
Okay. No. So let me just reiterate some of what I just said earlier. It actually doesn't matter whether you use cash or whether, the only difference between using cash and other people's money is how quickly you can grow your portfolio. That's the only difference. All those deductions, whether you use cash or whether you use a bond, you can still use those deductions in order to calculate a lower net income and then pay less tax, because those expenses are going to happen regardless of whether you are using your own cash or whether you're using a bond. The only extra deduction that comes from using a bond are things like your interest and your bank charges. But even when you have a property that you have paid for cash, you're still running a bank account and there's still bank charges there. You may have an overdraft facility where there's interest on your overdraft. You can deduct all that stuff, whether you've invested your own cash or whether you're using a bond. Doesn't matter. All expenses are deductible if you're running it within a proper company structure, whether that be a trust, whether it be a PTY limited, whether it be a partnership, whether it be a sole proprietor, whether it be a cooperative, whatever you're running, whatever structure you have in your business, you are able to deduct these expenses because they are business expenses, not because you've invested with cash or with a bond. So it doesn't matter whether you invest business or cash or bond, you can deduct all those expenses if you have a proper business structure.
Well, I think I noted.
Yeah, the only extra deduction, like Nigel has just said now, is the interest. That will be the only thing if you are getting a loan rather than using your own cash.
Oh, no, I see. No, thank you very much.
No, that's great. Bongani, is that a new hand or an old hand? Bongani? It looks like Bongani just quickly went directly into getting those reports. So let me lower his hand. Nigel, it doesn't seem like we've got any additional questions. I'm just quickly going through the people on Facebook to see if there's anything that they want. No, I don't see anything from their side. So, ladies and gentlemen, like I just said, if you did not understand the numbers and the metrics that Nigel was talking about, give me a call and let's see if I can help you. But you can also just start with Google and see whether you can work it out on Google. If you still can't, give me a call. I will be happy to sit with you and explain to you, because these are very important. Like Nigel has said, do not let emotions to get into the way of a good deal. Let the numbers tell you whether to invest or not how you feel, not how the property looks. And I just want to add this again, that you don't buy because the property looks good. In fact, you do not buy a good looking property. I also wanted to just say to you, the last thing is to go back to the issue of, not the issue, is to go back to the online program and the kinds of programs that are run, that are out there. There is all kinds of education of this property education that's available these days. But I think you need to make your decision whether people are after your money or they're out to provide information. If you see the kind of work that Ekasi Properties, or the kind of value that we Ekasi Properties provide, the kind of value that EDPF provides, that's why it was so easy for myself and Nigel to agree on this 5 weeks of Nigel's time, 5 Saturdays of Nigel's time to be with us. It's because of we are all about giving you value, not necessarily getting after your money. The online program that we talked about, you get the property information almost for free. I was talking to Nigel about his incubation program last week, where you pay 1,000 rands a month. And that does not even cover the food that you get from the online program, because the food that you get in the incubation program, because you need to attend, I think, 2 or 3 days, Nigel, a month. Now you get 3 days. Now you get the information from the program itself for free. Again, on the online program, you get it almost for free because the data, the tablet, the mentorship, the reports that you get discounts on, and all those things that you get, the 1 free month. By the time you take into account everything that you get out of these programs, you can see that you have not paid, you paid a very insignificant amount. So be on the lookout of the information that is given to you and whether people are after your money or giving you value, but that's for you to decide and see what to do with those things. But for now, I think let's leave it here and say to you, go and enjoy yourselves. You have now educated and empowered yourself for the past 1.5 hours, which is a brilliant thing to do, sacrificing just 1.5 hours every Saturday to empower yourself. Now is the time for you to go and do whatever that you wanted to do on a Saturday and have a nice weekend. Have a productive week next week. Let's meet again next Saturday. Bye-bye.
Cheers, Dumiso.
Cheers, everyone.
Cheers,
Thank
Simpiwe.
you so much.
Bye, bye, Nigel.
Bye.
Bye.
Thank you, guys.
Thanks,
enjoy.
Lazuza. The underdog millionaire.
Yeah, I got it from that. What's this guy's name? JT Fox. He was here some years back.
Oh. Okay, Mtimbu, have a good one.
Okay.
Okay. Kopano and Setus, are you guys still here? Let me just kill Facebook as well.
Oh, yes. Thank you for the. Yes.
But now tell me also.
Okay, now thanks, Kopano. We'll chat out, ne?
Okay.
Hi,
Bye-bye.
sir.
Hey, Lamin.
Hi, Mr.
Kunjan.
Tell me, how does one go about to join that 300 rands program?
I will send you the form. There's a form that you need to complete. I will send it to you, and then
All right.
you can complete it. Yeah.
Well, actually, just send them this link. Just give me a second here.
Okay. So how did you find the
Send them
session?
this link.
How did you find the session, Lamin?
That was very informative. That was very informative.
Yeah.
I think it's something to yeah.
Okay. No, it's okay, but we'll chat, ne?
We'll chat again.
Okay, thanks.
Thanks.
Bye-bye.
Bye.
Yeah, I've just sent you the link in the Miso. You can just send that link to everybody.
Okay. Is it the link that shows, is it gonna link back to Ekasi Properties, or how is it going to work?
No, so what I'm busy working on at the moment, I'm just getting the guys to put that little thing to say that the affiliate, to say it's Ekasi and whatever.
Okay.
So I'm going to actually don't send them the link yet. Let me get that done Monday, and then Tuesday you can send the link to everybody.
Okay.
So that doesn't then, because then what they're going to do, they're going to apply, and I won't know that they're with you. So
Yes.
I'm busy.